Okay, my lovely friends, here we go. It is me, Gregory Mannarino, pre-market report on this June 1st. The year is half over already. Can you believe that? It's incredible what happens as you get older. Seriously, time goes by faster. It really does, or at least it seems that way. Anyway, so yes, June 1st, 2023. People, let's talk, all right? Let's, I'm laughing again. Let's put this into perspective. So we got some more economic news today. And I want to hear from you on this. First of all, first quarter economic activity was just revised lower than the initial report, which was already freaking in the toilet. So, okay, economy, you know this already. We even got, let's see, yesterday, the PMI report, the ISM report, all pointing towards an economy that is just frankly completely done. And the Federal Reserve yesterday, what did they say? What was the word they used? Oh, deteriorating. The economy is deteriorating. Great. Obviously, this is what's going on here. We can see what's happening with our own eyeballs. Ghost malls all over the freaking place here. People struggling to get by. Debt loads skyrocketing here, and there's just no end in sight here. Here's the interesting twist to all of this. So keep this in mind. Right now, this is the Joe Biden-Stein mummy man re-election campaign. So the news is propaganda. You know that. So the private payrolls came in, and this is the number that he's going to tout. Private payrolls came in way, way better than expected. No one saw this one coming because it's fake, quite obviously. But initial jobless claims came in higher than expected. Continuing claims higher than expected. But, but this number here, it's fantastic. Private payrolls, you watch what's going to come out of the mouth of the thing that is now sitting behind the Resolute desk. We're adding jobs. Our economy is strong. No. It's just all false. It's all fake. Now, on the back of that, apparently great economic news, because we just added more jobs than we were supposed to. Meanwhile, again, continuing claims worse than expected. First-time claims worse than expected. But the number that our imbecile president is going to focus on is the private payrolls number. So on the back of this great news, stock futures are flat to slightly lower this morning. You know this is fake. There's also something else going on here, and you know what I'm going to say. The 10-year yield, in fact, the entire yield curve is coming down. 3.62 on the 10-year yield. That's 20 basis points lower. The 10-year yield has dropped 20 basis points in just 2 weeks here. Who's buying all the debt? You let me know, okay? There's big rally here in the debt market, which is, again, supposed to open a doorway for cash to flow into risk assets or stocks. They're trying to prop up that stock market, people, so they can, again, make it seem like our illustrious president is doing a great job. Oh, yeah, absolutely. Anyway, just to prove another point here, with regard to the economic data that they float out, being that they just revised first quarter GDP lower, how can we trust these numbers anyway? They're all fake. But again, there are some people that are going to buy it. It's incredible. All right. Anyway, with regard to the market, as I said, stock futures are lower. 10-year yield lower. The entire yield curve is lower here. A lot of debt buying here. Cryptocurrencies, Bitcoin is lower. Litecoin catching a nice bid this morning. I'm going to say overall we have a mixed bag with regard to cryptos. Gold and silver doing okay this morning. The relative strength of the dollar lower. Crude oil getting bid higher. All right, all the usual nonsense. And of course we have the specter of the promise to borrow more cash that we don't have, and that's going to make its way over to the illustrious Senate today, I believe today, and we'll see how that's going to play out too. So that's the story this morning. It's all well and beautiful and fine, and I can promise you this: speaking about the Federal Reserve, this is lovely. So we understand that there's supposed to be a time period where the Fed keeps its mouth shut with regard to what they're going to do moving forward with regard to rate hikes and cuts and everything else. But not only did they float out one Fed president, but they floated out two Fed presidents to say what you and I already know, that there will be a pause come June. Now, okay, lovely. What is this all about? Again, a mechanism to jawbone the stock market higher. What do they got going on? Rates are being suppressed. Some entities buying a lot of debt here. You can't get a move like this in the 10-year yield without, obviously, the Federal Reserve buying all the debt. It's 20 basis points is a substantial drop, but this is nothing compared to what we're going to see eventually when we get a sell-off in this debt market. I mean, it's like, how I think about it is like a rubber band being pulled and pulled and pulled and pulled, and all of a sudden, at one point, you get this snapback effect, and that's what's going to happen. There's going to be a major snapback effect in the debt market, which what I'm talking about is a massive sell-off in the debt market, and that is going to change the landscape of the financial system around the entire world here. Global stock markets are going to get pummeled. Cash is just going to move into commodities, and I also believe cryptocurrencies. You know that, but I'm going to tell you again, commodities are the place to be. There's just no doubt in my mind. You can get exposure to commodities, real things like these, by holding them, which I think is the best way, but several exchange-traded funds that will give you exposure if you're so inclined. I have put out at least three newsletters containing exchange-traded funds that you might want to consider. Again, my newsletter is free to everybody. Link in the description of this video. So that's the story this morning, people. It's just beautiful and lovely. All bad economic news except for one. Okay, so that should tell you something. This private payrolls number that was way better than expected. And this is so our president can say he's doing a fantastic job because his economic policies are doing great. Now tell me again, who runs the economy? Who runs the financial system? Who runs the financial markets? Oh yes, it's the central banks. They run it all. They do. And you all know that. And you can expect things to get much worse. What did we find out yesterday too from the Fed? That inflation is going to get worse moving forward. Core inflation numbers. We also found out that big retail is continuing to pass on their increased costs to you, because you know why. The CEOs, the bigwigs at these corporations, they're going to get their multi-million-dollar bonuses, and you're going to get the shaft, deep in the heart of the gabagool. You know how this works, people. It's always the same story. It always trickles down, and it trickles down to you and me, and we always pay the price for it. Let me ask you this. For this debt ceiling thing, which is obviously going to pass, who's going to pay for that? Oh, yes, it's going to be you too. You and me. Oh, imagine my shock. Imagine everyone's shock here. Oh, no. All right, people, look, so that's where we stand. That's where we're at. Now, today is the first of the month. You know what I'm going to tell you. On the first of every single month, I humbly ask for your support. Hey, Greg, you're doing a great job. I'm going to throw you $5. That's all I ask for every month, $5. Now, you can do this several ways. There are a few links in the description of this video. You can use PayPal. You can use Stripe. Or if you want to send me cryptocurrencies, I'm all for that too. All right, so I hope you choose to support my work here. I really do try my hardest to bring you cutting edge information, stuff that you need to know. And well, anyway, again, I would appreciate your support. Those links are in the description of this video. With that said, I will see all of you later for my live stream, 1:05 p.m. Pacific time. Pacific Standard Time? Can't say that. People get upset. But I will see you then, okay? Take care.